In today's video, I want to share with you how I use internal range liquidity. So before I explain it, over the couple of days, I've been uploading videos on liquidity, inducement, liquidity, everything liquidity. Why? Because liquidity is very important in the forex market. Liquidity is the reason why price moves. Okay, price move in area in search of what? Liquidity. So we have two types of liquidity, internal and external. I did a video some time back, you can look at it. But however, I want to share with you the internal range liquidity. Before we understand how to use that, we need to know what internal range liquidity is. Okay, in a normal market structure, this way, this is a simple market structure. We have a break of market structure. Now, this move up, as this market was moving up, it was creating liquidity. Okay, there was liquidity created. Okay, in a lower time frame, even on that same time frame, there was liquidity created. So this liquidity are called internal range liquidity. To the upside, we have the internal range liquidity heading up, and we also have the internal range liquidity on the pullback. Okay, how do I use this? Okay, for a move higher. Now pay attention. Liquidity is being used, okay, number one, to validate your POI. Okay, first thing first, the reason why this market retraced from here was because we have liquidity feeding into this POI. This I here is a liquidity. Probably we might have some other form of liquidity build up here, okay, just before this move happens. Okay, so all of these are what? Liquidity. Now it all depends on the time frame. Okay, if I want to continue this bullish push to the upside, I will look for a POI. Okay, what will make this POI to be valid is because of the internal liquidity or liquidity engineering that has taken place in the market. Okay, just before the POI. That is how I use the internal liquidity. I want to see internal liquidity taken into this POI. So for me to enter this trade, I want to see a sweep of liquidity like this, tap into this POI, and then head away. Okay, that is number one way in which I look at liquidity. The other one is I use internal liquidity as what? Targets. I use them as what? The first one, I use them as to validate my point of interest, and the other one, I use them as what? Target. These are the two things I want to share with you here. The internal, when you enter a trade here, okay, and you don't know where to target, look no further. All this internal liquidity that has been generated are your target. Now, why are they internal? They are internal because they are within your trading range. That's how to differentiate between internal and external liquidity. I'm going to share with you a trade setup I sent to my VIP group and how I took that trade and the original idea behind the trade. So now, initially, when price was here, I sent this out that we need to target this inducement. Okay, so I was looking for a way to look for a bullish push to the upside, trying to mitigate this point of interest. But as you can see, it's not all the time that market mitigate. So there are other ways I look in order to engage in this trade here. Okay, so this was a set of we were looking for bullish move, but however, things have to change because once we sweep the liquidity above here, my bias changed to a bearish setup. I will show you why. Now, if we go to the EURUSD, Now you see, when we push for the bullish push to target this inducement, okay, when the market went up to target this inducement, and then I saw a return, okay, I saw a change here. That was when I decided to look for bearish opportunity. Now, if you look at the 4 hours, what I really want to talk about here is the liquidity that was being built up. Now, we have a range here. When price was moving to the upside, price printed internal liquidities. All these lows, okay, all of these lows are internal liquidity. You can have them in form of trend lines. You can have them in form of chart pattern. You can have them in form of old lows and highs. Okay. Now, when price tap in here after clearing liquidity into this point of interest here, okay, and in the lower time frame, I got my confirmation entry. Now, what makes me give me the ability to hold this trade longer? My target, number one, this point of interest, this IPA, I was actually looking at this IPA candle here. Okay, this IPA candle was valid because we have all of this liquidity. Okay, these are internal liquidity for this move here. Okay, those are internal liquidity, meaning this zone is valid for a sell. Okay, so first of all, you need to ask yourself, is this zone valid? To answer that question, look for liquidity just before that zone. Okay, look for liquidity before that zone. Immediately you see that liquidity, you can now look for your confirmation in lower time frame. And the second way I use liquidity is in form of what? Target. If you go to the 1 hour here, you see more clearly. Okay, all of these lows were targets. These were what we're targeting. All of these lows, because the order flow here shifted bearish. Therefore, you need to target this whole liquidity up to this point. Now, if you look at this here, why did this point of interest hold? Why did the point of interest hold? Because we have liquidity feeding into it. All of these are liquidity, whereby when price grab liquidity to reverse, it taps into your point of interest, meaning it mitigates. Okay, I did a video on directional bias. How to know your directional bias is simply using the concept of mitigation. When price mitigates, then you can be expecting price to move higher. So the trade was from here until these lows were taken. Okay, until these lows were taken. Why? These are internal liquidity. And if you try to trade any setup in here, they are only as good as being scalped. You scalp them. But most times I will not attempt this. Okay, most times I won't attempt it because those other blocks are sitting at the pool of liquidity. Okay, those are internal liquidity. You rather wait for price to tap outside of it to the point of origin if you want to continue the direction. But overall market direction was what? Bearish. So in this case now, when the market resumes, I prefer a market to what? Tap into this zone, and then all of these will be my target. So these are internal liquidity now. Why is it an internal liquidity? We have a kind of chop, but I'm expecting price can trade higher because this particular level here has not been mitigated. Okay, so this is a bonus for you. This is a kind of trade setup. We are going to look at, these are low probability entry here. This is a higher probability entry. Okay, why is this an higher probability entry? Because we have liquidity feeding into it. This liquidity also made this valid, but it's still within the internal range. Okay, it's still within the internal range. So I want market to clear this liquidity into this point of origin to continue going lower. So that is how I use liquidity. You can backtest all of this. Make sure that before you pull the trigger on your point of interest, look for liquidity before that point of interest, and you will end up eliminating some unnecessary trade. If you have any question, put it in the comment section. Let me know which area you are struggling with so that I can make content around it for you in a simple and clear language where you can understand. And then when it comes to internal and external liquidity, I will see you in this video.